You may want to take a position in Bitcoin because it's not something that's unlimited. It has scarcity. And that seems to be what's driving its latest price appreciation. And as a result, the coin has moved past $100,000 in value. I think the market has spoken on Bitcoin. I think it's here to stay.
With Bitcoin breaking into six figures and still climbing, it's finally doing what it was built to do, skyrocket. It's not unlimited, it can't be inflated, and its built-in scarcity is now fueling one of the most powerful price surges the market has ever witnessed. That's the latest insight from Kevin O'Leary, Shark Tank investor, entrepreneur, and chairman of O'Leary Ventures. He's become one of the most outspoken advocates for regulated crypto adoption in the U.S. According to O'Leary, Bitcoin's scarcity is about to accelerate thanks to two key U.S. legislative moves, the Genius Act and the Market Structure Act. These laws are paving the way for traditional investors to enter the crypto space with ease, unlocking a flood of institutional capital. As trust in the market strengthens, more investors are scrambling to secure their share of this limited asset, pushing Bitcoin into uncharted territory. Stick around until the end of the video to hear why Kevin O'Leary believes regulation could send Bitcoin to heights we've never seen before.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
The reason this is occurring, in my view, is that I don't know if you're watching what's happened in the last 48 hours, the advancement of what's called the Genius Act in the United States, which was the old Stablecoin Act. It looks right now that the administration is going to pass this Stablecoin Act, which will allow the U.S. currency to become a form of digital payment system globally, which is a good thing for the U.S. dollar in the view of most senators and representatives. And so if this passes, and the reason it affected Bitcoin is it leads to the next bill, which is called the Market Structure Act. And the Structure Act determines whether Bitcoin is a commodity or a security. And that, once that's decided, institutional wealth and sovereign wealth can now go into Bitcoin and allocate it as an asset. And that is very, very positive for price discovery on Bitcoin. And as a result, the coin has moved past $100,000 in value. And there's a fair amount of interest in it because if they anticipate that the Stablecoin Act will pass and that eventually both the House and Senate will look at the Market Structure Act and determine what Bitcoin is as an asset, and it will become an alternative asset class for institutional investing. There are many who don't agree, and they are certainly entitled to their opinion. But clearly there's a market for Bitcoin. It's a volatile asset, and had you invested in it 24 months ago, it was probably one of the best performing assets you could have invested in vis-a-vis the US dollar or any other currency. Everybody has an opinion, and that's how markets are made, and that's absolutely fair. But I think the market has spoken on Bitcoin. I think it's here to stay. There's only 21 million eventually Bitcoin, a piece of information on scarcity, and therefore there's no government that can print any more of it. That's not the case for any currency like the US dollar or any other currency for that matter. And so if you're concerned about that, and there's an unlimited supply of money you can print, you may want to take a position in Bitcoin because it's not something that's unlimited. It has scarcity. And that seems to be what's driving its latest price appreciation. There's another conference coming up in Las Vegas shortly. There was a lot of speculation it would be at 100,000 by then. In fact, it is past that. Nobody really knows about the demand metrics at any one time. One thing is certain, though, about the price of Bitcoin, it's volatile. And so if you're going to own it in a portfolio, you probably need diversification because the volatility in Bitcoin is, in some ways, more volatile than any other market. And so I think it will remain highly volatile until the institutional investor is allowed to allocate to it, because institutional investors put generally a 1% to 5% weighting in any one asset class, and they hold those positions often for extremely long periods of time. And so when they come into the market, they'll be buying and selling and making markets for Bitcoin that don't exist today. And I think that's when things stabilize for Bitcoin. And I think we're a little ways off, maybe a year or two. But I know that if the Stablecoin Act passes, I, along with many others, will be working on clearing the Market Structure Act that will determine Bitcoin's place in the institutional cap table.
The Genius Act, formerly known as the Stablecoin Act, establishes a clear legal framework for stablecoins. It mandates that these digital assets be fully backed by short-term U.S. Treasuries, a move designed to build trust and integrate stablecoins more securely into the financial system. While the Genius Act lays the foundation for a more stable digital dollar, the Market Structure Act targets Bitcoin directly. This bill will determine how Bitcoin is classified under U.S. law. If it's officially recognized as a commodity, much like gold, it would unlock massive opportunities for institutional investment, from pension funds to major asset managers, by removing regulatory uncertainty. And when that scale of capital flows into an asset with a fixed supply, price movement doesn't just happen, it explodes. According to Kevin O'Leary, this transformation may take a year or two to fully materialize, but the path is already set. With only 21 million Bitcoin ever to exist, demand is building fast. The coin has already surged past $100,000, and with momentum like this, the next move could be even more dramatic. Now, let's dive into more clips from Kevin O'Leary as he explains why regulation might be the spark that sends Bitcoin straight to the moon.
We're in the final phase of this bull run. Let me guide you. We've launched DailyDoseCrypto Alpha, a free private Telegram group just for the DailyDoseCrypto family. Inside, I'll guide you through profit-taking strategies, real trading tactics, long-term crypto investing mindset. Only 500 spaces available, then it's closed. If you're serious about this bull run, click the private link to join now.
There are billions of dollars out there waiting for policy, because for all the excitement about Bitcoin, for all the excitement about crypto, for all of the wonderful productivity, these products and blockchain and everything that's promised, these massive pools of capital, these trillion-dollar pools, own this much crypto, this much, practically nothing. It's the purvey of high net worth individuals, hedge funds, and retail investors. And that's okay. But what we're missing is policy. When we get policy and the regulator regulates, that's not a negative thing. The spigots of capital are going to flood into this sector like you've never seen. And so for those of us that can invest in it now, you're getting ahead of what's going to be a huge wave of interest when policy occurs. I predict in the next 10 years that crypto, blockchain, Bitcoin, all of this innovation will be the 12th sector of the S&P. Now, why do I say that? Because Bitcoin is not a coin, it's software. Ethereum is software. Avalanche is software. Helium is software. Solana is software. It's all software. And the smartest hands over keyboards today in the world are developing on the chain and bringing innovation to financial services, which in the end is the largest sector on earth. And the good news is, on a bipartisan basis, there are many senators and reps that are thinking about this in a proactive way. That signals that regulation is coming, and that is a good thing. Watch what happens. And the reason you should care is, if it's backed by the US dollar, it will become the reserve currency of the earth. That's what will happen. And why would we want to give that up to any other country? Why would we ever give that innovation up? So let's regulate this. Let's get behind this bill and make it happen. That way, we have the innovators coding and we have the government regulating. That's a great outcome. It's coming soon. Now, let's talk about the minefields. We'll start with the SEC. Now, I don't know if you read these memorandums, but a few weeks ago, they started proposing that in addition to financial audits in all companies that are public, in all 11 sectors of the economy, that they have a carbon audit, that they get somebody, if you claim that you're carbon neutral, you're going to get audited every quarter. Now, in the Bitcoin mining industry, where I'm a participant, the way we get carbon neutral is we buy carbon offsets. The problem with a carbon offset is the tracking error is so huge that no public auditor will sign off on those statements. You can say you're carbon neutral, but there's nobody going to sign it at the risk of being offside with the SEC. So if the SEC adopts that policy, that's bad for proof of work. And it's bad for Bitcoin mining, because the first pioneers of this in the US were very concerned about being ESG compliant, and they went to that market. They went to the offset market. 2 weeks ago in the EU, they tried to ban proof of work. because they were so concerned about how much carbon it was doing. Now, here's why Bitcoin mining is going to save the world. If this policy gets implemented, because it's also in the ESG mandate that Larry Fink at BlackRock put in place, and it's also mentioned directly deep in the executive order of the president himself. It's a direct swipe at Bitcoin mining. But why is Bitcoin mining good for the earth? Because the next generation of Bitcoin miners, and some of them are represented right here, are starting to work with energy that does not require carbon. Hydroelectricity and nuclear power, wind and solar. The drive to produce Bitcoin is so economic in value that they will go ahead and fund the next generation of machines and turbines. 90% of dams built in America in the last 100 years contemplated hydroelectricity, but never installed the turbines. I'll install the turbines. Why? Because it's great economics if I can use that and not be hassled by a carbon audit. This is the future of Bitcoin mining. We will be developing power for all communities while we mine coin in an ethical and 100% green mandate that we can do with hydroelectricity. This speaks to Montana. It speaks to the Tennessee Valley, upstate New York, Quebec, Canada, northern Norway. All of these places, Georgia, have an abundance of unused hydro, and that is the future of Bitcoin mining. And it's a good thing. It provides for communities. It provides extra power. And the capital required for this is unlimited. Now, the beautiful strategy here is when we get policy, when we make Bitcoin an allocation for institutions, which they do not have yet, what I predict will happen, they will put between 50 basis points and 3 basis points or 300 basis points into their portfolios. How much money is that? Trillions of dollars. So if you want to see Bitcoin appreciate in value, if you're an advocate like I am, because it's software and it's a property and maybe it's a currency, you want regulation. You embrace this and you stand back and watch the capital pour into this.
Bitcoin's rally has kicked into high gear, holding firm above $100,000, and top analysts are quickly raising their price target. Anthony Scaramucci, founder of Skybridge Capital, predicts a surge to between $180,000 and $200,000, driven by accelerating global adoption and institutional interest. Standard Chartered shares a similar outlook, forecasting a year-end price of $200,000 as institutional capital continues to flow in. Other experts are even more bullish. Joe Burnett of Unchained sees Bitcoin potentially hitting $250,000, citing its superior monetary properties and the growing likelihood of a sovereign nation race to acquire Bitcoin. Analysts at 21st Capital go further, projecting a peak of $285,000 this cycle based on their quantile model theory, highlighting the strength of Bitcoin's fundamentals. What's fueling this optimism isn't hype, it's real, measurable momentum. Growing infrastructure, rising capital inflows, and a regulatory landscape that's finally giving institutions the green light are removing previous barriers to entry. With supply locked at 21 million and demand rising fast, Bitcoin could be gearing up for its most explosive run yet. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.